Good afternoon, my name is Jordan Lambert, Market Analyst at Gelaton Management. Growing fear of a US government shutdown pushed gold higher than 1340 on Friday and caused a spike to 1352 shortly after this week's market open, as the deadline for a resolution becomes agonizingly close. If the Democrats and the Republicans cannot reach a deal by midnight Monday, there will be a partial government shutdown, resulting in thousands of public sector workers being temporarily laid off. Such a scenario should lift gold higher as the dollar gets a pounding, but history has shown us that gold rallies driven by safe haven demand are often transitory, and this will offer bears a chance to short the market, or could offer bears a chance to short the market, should I say, after the spike. So if you do miss the rally, just wait for the market to settle, and often we do see the spike in price retrace, offering bears an opportunity. Certainly at the moment, the market focuses on the possible US shutdown and the US debt ceiling, but also be aware that there is an Italian government crisis at the moment following the resignation of 5 cabinet officials. So if the market's attention quickly switches to this Italian government crisis, we could see the euro-dollar pair get hurt, and this could consequentially hurt gold. So that isn't the market focus at the moment, but if we can get through the possible US shutdown, that markets will certainly switch to that. Let's just take a look at the technical aspects of the market at the moment. No doubt the fundamentals at the moment are taking the main or will be the main influence on the markets, but it's worth to take note of the technicals as well. On the daily chart here, we have a bearish crossover of the 20-day and the 50-day moving average, as we can see here. We also have a bearish divergence according to the stochastic. So you can see in the lower pane here that we have a bearish divergence because the stochastic is showing lower lows, but the actual price action is showing higher lows. So this just indicates that downward momentum may be forthcoming. So if we get a good result for risk assets regarding the government shutdown, for example, if there is an agreement in place before midnight Monday US time, we could see the dollar rally. If we see the dollar rally, we could see gold fall, and then these bearish technicals will come into play and have even more influence. So if there's a positive US government result, we could see gold go lower, and these technicals could really have an influence, so just be aware of that. Also, taking a look at the 4-hour chart, we can see that we have a shooting star of some description that severely and deeply pierced the top Bollinger Band, so we could see further declines as well. It just indicates that when price went up to around 1350, 1352, there was a sudden amount of selling, indicating that market feels that, investors feel like the market is very overpriced if it gets to that level. But yeah, fundamentals could drive it higher, but if fundamentals, the fear of the market wanes, these technicals could really take advantage of the market. Thank you very much for listening to me, and I'll speak to you again tomorrow.